You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that music means it is time once again for a little show we like to call around these parts the Option Block. Yeah, easy for me to say. Yeah, it's that time of the week, listeners. It's Monday, noon Central, 1 p.m. Eastern, as we are here in the Eastern time zone in the Southern studio for our final shows here from the Southern studio before we head back to Chicago. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. If I sound a little bit different, it's because I am indeed still in that old Southern studio, at least for a couple more shows here. But we're back in Chicago forthwith, just in time for the holiday, for no shows. So, c'est la vie. Funny how all that works out. Of course, you guys should be able to access us via the live stream. It seems like everything's working over there on the Mixlr front again. So mixlr.com/options-insider. That's our URL. Never changes. So you grab it once, set it and forget it, and just leave it on in the background. Maybe leave it at a tab in your browser, and bam, we're there. Or you follow us on Mixlr, set up an account, and then bam, you get notified the second we go live. Not just with this show, but all the fun live shows we do on the network. Maybe Boot Camp, maybe the Advisors Option. You never know. Options Playbook Radio. You never know what's going to come your way on the live stream. So check it out. It is fun stuff. Speaking of fun stuff, we got a fun one in store for you today. And joining me to help you do just that, help you learn a little bit, help you have some fun, help you hear what's trading. We got a rowdy crew. Let's go out to the hot seat because he hasn't joined us in a while. Mr. Brian Isabel holding down the active trader hot seat there from Fidelity. Brian, welcome back to the program, sir.
Thank you very much. It's always a pleasure.
And refresh my memory. Are you from the Jacksonville crew? Are you from up northeast? Where are you dialing in from?
I'm the Northeast. I'm up in Merrimack, New Hampshire.
Yes, the options mecca. I think New Hampshire and Maine are fighting back and forth every day to figure out who is the true options mecca out there. Right now, Maine seems to be leading. So you guys, you got to get on it over there, Brian. You're not exactly doing your diligence. Maine always taking the top spot there for options meccas from Google's trends data. Anyway, who knows how reliable that is? But I think it's because Andrew's just typing options into his browser all day long. Options. Speaking of the aforementioned Andrew, let's see if we can get him. Let's lure him away from the folks thieving all of his crabs over there. Mr. Rock Lobster, welcome back to the show. How goes your battle against the plundering and the pilfering of your clams, sir?
think the clams pilfered all they can, and the clammers are now out, and the tide is in. So pretty tough to clam steamers in 10 feet of water. So they are out to maybe they're just out having a good time today. No clams for them today.
So when the water's in, the thievers, the poachers are at bay, is what you're saying. Okay, interesting stuff. We learned a lot here on this show, including the right times for clam poaching here on the program. Let's see if it's the right time for some trading as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we talk about what the heck is trading. And, going into the weekend, the narrative was all on one thing, right? It was all G20. It was all Trump and China. It was all trade war. It was all, will they make some sort of agreement? Will they put this trade war finally to bed? Will Trump double down on his threat to add even more tariffs? It was a lot of waiting. Volatility was kind of remaining firm. Everyone was playing the wait-and-see game. And then coming out of the weekend, we got, I guess, a little bit of insight into it. We know we're not going to add more tariffs, so that's a good thing. And vol coming off as a result. It does seem like all the thunder was stolen in the end by North Korea. Who'd have thunk it? Everyone talking about the steps into North Korea. First time a U.S. president has done anything like that. Trump, say what you will about him, never one to miss a photo op when it's available. And he certainly took advantage of that there in North Korea. So that seemed to be the big takeaway come out of the weekend as opposed to all the trade war. We didn't really get a lot of firm information on that. Tech stocks rallying today as a result of no new tariffs. So I guess that's a good thing. We're seeing, in fact, most of the major indices up today. The Dow, actually not leading the charge, up about 0.5%. The tech-heavy NASDAQ, though, as a result of no new tariffs, up almost a full percentage point, and the Dow up about a third. Excuse me, the S&P's up 0.5%, and the Dow up 1/3%. Gold obviously taking a break, given all this green on the screen, back below the 1,400 level again. So all the gold bugs I know going to be wringing your hands. That 1,400 level. A lot of you were liking it. 1388 coming into showtime here. Crude hovering around that 59, 58 and 3/4 level. So not a lot going on in crude land. And of course, all of this just pretty much green on the screen, and the weekend risk coming out of the market means VIX, at least VIX cash, taking a bit of a break off. Not quite a full handle, down to about 14.25. That puts us, let's see, about almost exactly 2 points below where we were last show. We were at about a 16.25. Our old friend VVIX also taking a bit of a break, down 9 handles from our last show. So the volatility coming in as well. Back into that 70 handle now, 78. So that's when I think savvy ears start perking up and saying, maybe there's something to watch here, because volatility doesn't stay that low in terms of the volatility very long. Our old friend VXX also feeling the erosion juice off 2 handles. I know the Rock Lobster's probably happy about that. So maybe let's start there. Mr. Rock Lobster, are you happy with the amount of juice you got this weekend?
Well, I would say, yeah. We did get
that was a resounding meh.
I mean, it's not like it's going to go to 12 today. Now all of a sudden, with the happiness on the trade front, we're not going to get that big 0.5 point. I think you're looking at the Fed, all the Fed fund watchers. They're starting to handicap that again, and there's a little percentage chance you're going to get the 25%, 25-point basis cut until the trade war is over. No, we're not going to get the big 0.5 point. I think the market's just pulling back a little. I think it was pretty giddy. So yes, I was able to sell some VXX puts this morning. If you had very aggressive short gamma trades in there, or long gamma type trades, you would have done well, and you wanted to sell that stuff in the morning. And now you're waiting for the erosion to happen and see really what happens to VIX, because now you need something to move a little bit. And as of this point, like, okay, we just hit all-time highs again. Now everybody's like, but we now have just a 25 basis point cut. That really doesn't matter much, and we still have earnings, and the trade war's still not done. So we could get kind of a, like the market just sort of sits and has like that meh reaction, which is actually bad for vol. So I think today is just like the small piece of what could be a longer slide, as long as the news stays reasonable, I would say. And I think that's where the vol is. So yeah, there was some chances to take some VXX put profits this morning. And now it kind of be like, we're waiting around really to see if we make any money or not. So we're just kind of hanging out there. And I'll tell you, wouldn't surprise me if we're only up like 0.5% today by the end of the day. Just the market's finally, it's like sighing the big sigh of relief. So we'll see.
Yeah, I mean, we didn't really get. That's why I was kind of surprised that we didn't really get all eyes were on it. We didn't really get a lot of concrete information coming out of the trade war talks this weekend. By the way, I don't know, you're at a 13.95. I'm at a 14.75 for our vol views crystal ball prediction for this Friday. I'm not hating my level. I'm okay with 14.75. We're only half a hand away from that right now. So we could clearly anything could happen, could get us back up there and beyond. So I'm not quite panicking yet. Are you liking your 13.95, sir?
Well, I'm just saying we did hit my number on the nose today. So it did trade there, and from a point of view on like current trends going, I think we could easily get back there. So I'm sticking with my number, even though I might not have, of course, probably the one Friday I'm going to get to enjoy a resounding win. I'm not going to get it. So anyway, I found that slightly funny, by the way.
But you weren't at an exact bullseye as of showtime, which is when it counts. Let's say, for example, when you took umbrage with my prognostication last week, when I was exactly at a bullseye at the moment that you took umbrage. That's what we're looking for here. That's the kind of quality stuff. Not it touched it at one point during the day 7 weeks ago. That's neither here nor there. But when the folks are tuning in, when the lights are on, when the mics are hot, that's when you got to be on a bullseye. Going on. Uncle Mike, too, by the way, dialing in listeners, telling us he's on a little bit of a well-earned vacation this weekend. He's up in northern Wisconsin, so bordering of Canada up there. So hopefully he's having fun. That's why there is no Uncle Mike here on the show today, which means, Brian, you're in the hot seat. It's going to get extra hot today, sir. You got to do double duty. You got to talk now for 40 minutes. Are you ready, sir?
Absolutely. I got to tell you, I must be some sort of hex. There's always someone that's on vacation or gone when I come on.
I think they're telling you something, Brian. That's all I'm going to say.
Yeah, I think you're right.
But what is lighting up the tape over there in Fidelity land coming into this usually quiet holiday week, sir?
Yeah, it's a really interesting week, right? This should be a quiet week, but it's actually kind of action-packed, especially starting today. A couple interesting things that I just saw this morning. The usual suspects, NVIDIA, MU, AMD, the chip makers, after all the trade talks were up there. Amazon and Apple, another one, they're usually on that most traded list. But a couple things that I saw coming up that were interesting were some options on XLF, which is the financials ETF, FXI, the China ETF, and actually FAS, another 3 times leveraged financial ETF. But I thought it was interesting because of all the buyback talk and dividend payouts that came out after the Fed stress tests last week. And it seems to be folding over into this week as well. So I was a little bit surprised to see that was still at the top of mind for so many people. But that, and obviously China, it's been in the news since all weekend, so not terribly surprised to see some activity in the China ETF options. But those were the main things that stuck out to me. I thought it was interesting that MU was up so much. It was up around 6% this morning. It's come down back to earth a little bit, like 3.5%, but it had a real big rocket ship kind of morning after those trade talks came out.
Yes, not exactly surprising. I think that the Micron, or I should say the Fidelity crowd, would like themselves a little bit of Micron, given everything else that's been going on here. Just all things Micron, and we're seeing a lot of, again, global macro plays as a result. So I guess tech and macro are kind of the two plays we're seeing a lot of as a result of. I don't know, Brian, were you like us? Were you kind of a little underwhelmed with the information we got coming out of this weekend? There's no real, aside from no new tariffs, there wasn't really a lot laid out there in terms of plans going forward. Did you have the same takeaway?
Yeah, absolutely. And quite frankly, I thought that just the terms of them in and of themselves were interesting enough. It's a trade détente or a trade pause, but there's no talk of any kind of resolution, no real concrete data. No, this is absolutely going to happen. This is going to not happen. Even the talk on Huawei was kind of ambivalent, like, oh, maybe we're not going to be so harsh on them. So, yeah, I was actually pretty surprised. I thought it was going to be a lot more definitive coming out of the G20, but alas, it is not.
Yeah, there's still a lot of deal breakers out there, it seems like, in that. The Huawei thing apparently for China is one of them, which seems like it's a non-starter for us, and they require it. And then, of course, for us, we require the IP steps, and China historically, it's not really just even culturally part of their culture in terms of the respect for copyright and IP the way we have it here in the West. It's not quite the same thing over there, so that's going to be a difficult hurdle to overcome as well. So still a lot of interesting hurdles. No new tariffs. That's a good thing. Obviously, the tech stocks, they don't need much of an excuse to rally, and they're feeling that love today. Let's see what's feeling the love out here in the broad options market today. Let's go to the top. Let's go all the way out to top 20 in terms of equity option listeners. See what's lighting it up. Start at number 20, our old friend Beyond Meat. I can't escape this topic. Everywhere I go, people are asking me about these substitute meat products. It's a hot thing, clearly a hot thing from a trading perspective too. 55,000, I should say, on the list for number 20. Number 19, we've got good old everyone's favorite ABBV, which is AbbVie Inc. This is a biotech. Interesting. Trading $72 today, off a little bit, not a lot. Must have some corporate action activity out there. 56,000 contracts going up there. Number 9, good old JD with 59,000. Number 8, Boeing. Bank of America's later, higher up on the list usually. I always see BAC and BA, and I think Bank of America. But it's Boeing. BA, 63,000. Number 16, Disney. 66,000. Number 15, Qualcomm, 71,000. Number 14, GE, way down the list today. That's surprising. 73,000. Number 13, Netflix, 85,000. Number 12, Twitter, 88,000. Number 11, Amazon. Weird day. Usually our top 10 players, way down the top 20, 99,000 for Amazon. Number 10, good old Telephone, a.k.a. 101,000. You know you're old school. At least when you walked on the Seaboard, the old guys called it telephone. Don't go to the telephone pit. That's old school. Number 9, Microsoft, 104,000. Number 8, NVIDIA, $1.59 on the tape. Number 7, Facebook, $1.17. Number 6, our old friend Bank of America. That's where it belongs, not way down there with Boeing. 179,000 on the tape for number 6. Number 5, AMD, 206,000. Number 4, Tesla, 212 on the tape. Number 3, Micron, 273. Numero dos, good old Baba with 296,000. Number 1, yet again, good old Apple, 366,000 contracts on the tape. Coming into showtime, let's see how the indexes were doing. Actually, pretty decent paper today. All things being equal out here. The VIX actually lighting it up. The ADV, though, is pretty light right now. It's actually under 400,000. 393,000 contracts is the ADV. 366 on the tape coming into showtime here. SPY ADV is about 2.6 million. Seen about 1.7 million on the tape coming into showtime. SPX, 1.3 million is the ADV. About 720 on the tape. The Q is about 750,000 is the ADV, about 430 on the tape coming into showtime. And the Russell, a.k.a. IWM, about 320 is the ADV and $1.65, so right around half there for their overall volume today. Coming into earnings, what's going on? Not a heck of a lot, as you might expect, on the earnings front this week. But you know what? Just take a breath. Take a relaxing little break. Because as in a couple of weeks, we're right back at it again. Good old Netflix on the 17th here. So, yeah, it's a little bit of a break. And then we got Domino's, Goldman Sachs, Wells Fargo on the 16th. So we just do the whole dance again, which is fun. Fun for us, fun for you, fun for everyone out there. Speaking of fun, we talked about BYND before. It's a hot name. A lot of you guys are trading it. Fidelity keeps talking about it as well. Your clients love it out there in terms of BYND. Let's see what people are trading out there in BYND land. Let's go the top 5. The top 5, number 5 option position in BYND right now are the AUG 50 puts. By the way, let's see where BYND is right now to put that in some frame of reference for you out there. It's 156.20. So those puts a wee bit out of the money. let's just say. The AUG 50 puts for 3,200 of those. Obviously still small size, but decent overall for an IPO. Number 4, the no 50 puts, actually, with 3,200. So obviously that's a key level for some stock folks out there. Number 3, the Jan 80 puts, 3,400 of those. Numero dos here, the November 80 puts for 4,000. And number 1 position out there right now, the July par puts with about 7,800 open there. Good chunk opening on Friday, 1,400 more. So a lot of opening paper going up on these nearer, I should say, not quite nearer out of the money puts here. Certainly the closest of the top 5. The rest of it is pretty crazy stuff. Speaking of crazy stuff, it's about that time, listeners. It's time to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the show where we get weird, we get wild, we get whimsical. Let's kick things off. We like to hit the names you guys love, the names you guys trade, the names you guys watch day to day. And when we're talking day-to-day names you guys write us about and ask us about and just watch and trade every day, it doesn't get hotter, it doesn't get more interesting than Element Solutions, Inc. That's right, I went there. Ticker symbol, of course you know it, tattooed on your arm probably, ESI. Everybody loves this name. Trading today, coming into showtime, $10.45, up a whopping 11 cents. Or for this name, 1%. Let's look up. Everyone obviously knows what ESI does, but for those of you who might be newcomers to this name, let's see. This is a Specialty Chemicals Production Corporation. So there you go. That tells you a lot about what they do. Let's look back over the year that's been here in ESI. Started a year ago, pretty much about a buck north of where it is right now at about 11.5. And then it rallied all the way up to around September. It hit, looks like around 13.5. That was the high for the year. Then it sold off again pretty dramatically. Looks like a buy around Christmas Eve. Was when it hit its nadir of around 9.25. So sold off again. Actually, no, I said take that back. Hit around 10 on Christmas Eve. Then it sold off again in right around early January for about 9.25. That's where it hit its real nadir there. Then it kind of bounced back up to 12 in February, March, then back down to 9 again, back around April. So it's kind of been all over the place, back up to. It's been kind of range bound in the last a couple of handles, 9 to 11 or 12 over the last couple of months. So it's been interesting. As I said, coming in today, 10.45. So not quite at the low, but about a handle or so north of it. Let's see what we got out here. Let's see, 9,500 of the AUG 10 calls lighting up, 9,524 to be precise. These things were 90 cents at $1.10, so actually decently tight for a fairly illiquid, cheapy name. These went up 9,524 times for 90 cents, so right on the bid. These were opening over there on the Philly. So, Mr. Rock Lobster, we got a name that's pretty much a buck off its 52-week low, buck and change. And we got someone coming in, choosing to write, looks like, in the money calls, 50 cent in the money calls. I'm guessing dearth of strikes is probably an issue here as well. Probably why they chose the 10s. Maybe there are no 11s. I'll have to look. But they hit the 10s on the bid, 90 cents. So they're selling pretty much 45 cents worth of intrinsic value with this, and they're doing it in the AUG cycle. So, I don't know, 55 cents of extra juice, or I should say 45 cents of extra juice on top of the 45 they already have. This one floats your boat here, so that gets us obviously out to about not that far from where we are now, half a buck. So not quite up to the 52-week range, but also could keep them a little bit, gives them a little bit of juice to the downside if things move. How do you like this one, sir?
This is one of those ones where I have a lot of people like, they sell a call against a stock and the stock takes off, right? And they're unhappy. And I try to coach the students, okay, if you sell a call against stock and you get taken out, that is the best you can hope for because
you win
get to keep all the money.
Yeah, you win.
You win because you have a synthetic short put. Everybody wants to hit that. You want the call to expire worthless. You buy back the call for nothing. and then you get to go sell another call. I totally get that, but it's very hard to do that. So I would say, yeah, somebody's saying, okay, I'll take the 5% yield. Or the 4.5% yield. So I'm good with that. To me, this just looks like somebody that's just satisfied with the yield. They get taken out, that's fine, and on they go. So a perfectly reasonable trade.
Yeah, it may sound like we're damning it with faint praise, listeners, but we'll tell you if we don't like it. This one, yeah, it's not terrible.
It's reasonable.
Yeah, it's reasonable. It's fine. I think some of the odds in the money strike selection probably has to do with the dearth of strikes in a cheapy name like this, so you can't take them too much to task for that. And some people like to write in the money calls. Who am I to judge? Well, actually, that's kind of my job here, but still, outside of that, it is interesting. Yeah, some people I know who like cover calls, they exclusively live in the money range, which is interesting and probably worth a discussion in and of itself. But we have to keep on rolling. Getting on to Mr. Rock Lobster, we're hitting the hot names. We're hitting the big ones. We're hitting the names everybody wants to know about. So, of course, once we finish up with ESI, you know where I'm going next. You know I'm going UFS, right? Of course. Going to Domtar. Everybody loves Domtar. Ticker symbol, of course, like you don't know. UFS trading today, $44.05, off 44 cents. So a lot of 44s going on in Domtar today. If you're wondering what they are, this is a paper mill company. They're the largest integrated producer of uncoated free sheet paper in North America. That's a mouthful, and yet also not that interesting at the same time. It's kind of like Dunder Mifflin, paper company. All right, let's see what was going on. Before we do that, let's go out to the chart and see what's been going on over the past year in everyone's favorite Dunder Mifflin, Domtar Corp. Let's see, right? About a year ago, it was north of where it was right now, but not a ton. Looks like it was about 48 or so. So about 5 handles north of where it is right now. Rallied all the way up to almost 55. That was back in, looks like about late September, early October. 54.5 was a 52-week high out there. Then it sold off again over the course of the next few months down to right around Christmas Eve when it hit its low of about 33 and change. So sold off quite a bit, about 20 handles. And then it pretty much just turned right back around and got all that back. Looks like by about February maybe into early March, this thing had gained pretty much all of it back. It was in the mid-50s again. So quite a run from 55 down to 33, back up to 55 over the course of like 4 months. So quite a move. Then it's kind of been slowly trending to the downside again and selling off to where it is right around now, right about $44 again. So an interesting name out here. Let's see what's been lighting it up out here. And again, kind of a quiet day, listeners, for some of the names anyway. So not a huge volume print here, but still, for a name like this is a pretty big size. This is the equivalent of, 100,000 going up in an Apple or something. This is, let's see, what do we get? We got the July 42 half puts. So near term, slightly out of the money puts, going up for 60 cents. These things were 30 cents at 60. It's about what you'd expect for a name like this. And this guy lifted the offer. He had to probably to get all 1,812 done that he wanted. These went up also on the Philly. A lot of love for the Philly today here on the show. There are earnings, but they are after this expiration. They're August 1st, so not part of this play. So Mr. Rock Lobster, we got a name that's kind of sold off a bit of late, and it's kind of been hovering. It's not at the 52-week lows, but it's about 10 handles north of it or so. And we got someone coming in chasing some near-term puts. These will go out in a few weeks, and he's lifting the offer about 2,000 times. What's your spidey sense telling you on this one, sir?
This you know what? Haven't we done something with Domtar at least once in our?
It sounds vaguely familiar. Has that sci-fi bad guy ring to it?
Yeah, and it doesn't end up being just some sort of like strange. I don't know. They make canned goods or something. I don't know. I'm trying to figure this one out. Not really lying in the sandy, but just freaking out over the market. I'm trying to. This name is on the tip of my tongue, and I just cannot. I can't. What the heck?
Okay, I just did a cursory search while you were talking, and the last time we discussed, at least from my cursory search here, that we discussed Domtar, we did talk about it once before. It was on February 12th of 2015. They were at the money call buyers. Ironically, when the stock was almost exactly where it is right now, it's $44.76. The stock was up $1 and change, and someone bought the April 45 calls for $1.80, almost the same size again, $17.85. So maybe our same friends been playing out here for a while.
Yeah, this is like one of these they make paper products, right? Personal care, absorbent hygiene. Are they diaper makers? Maybe. That's why I was sticking in my head. I was like, there's something about this company that just is, it feels like the kind of company Warren Buffett would buy. So the reason why somebody is buying puts in this thing, puts in stock play or something, it's like, why this one? Why buy puts in this one? It's kind of I have to say it's a bit of a head scratcher for me.
Yeah, I mean, reaching up to lift the offer nearly 2,000 times on a name that doesn't really blow the doors off too often. It's kind of a bit of a head scratcher. Doing it with a few weeks to go, also a bit of a head scratcher. I agree. I think it makes more sense with some stock. I like it a little better. I'm not saying I like it, but I hate it less. Maybe it's the more appropriate way to go. So yeah, this with some stock, maybe a little bit better. I'm gonna put this in the to be watched category, Mr. Rock. Also, we're gonna come back to Domtar. Can you handle that, sir?
I can. The only reason why I read because I think we covered it, and they make some strange paper product like a diaper or feminine thing, hygiene, something. It was something that got us. The name is so innocuous, yet the actual product everybody knows.
It does sound like a good odd block name, Domtar. It's what you expect for an odd block candidate. And we shall come back to them, listeners, by July expiration to see how these fared. Speaking of coming back to some names, let's do just that right now. Let's go back all the way to April 8th. To a trade we profiled on the show back then. It was in our old friend BP, a.k.a. British Petroleum, trading today 42.12, up about half a buck. Let's see, where were they back when we profiled them on, let's see, it was April 8th. A little bit of chart magic, listeners here. April 8th, they were at a whopping 45 and a quarter, so about 3 handles north of where they are right now, listeners. We profiled at the time. Looks like there was some aggressive call love in BP back on April 8th. 10,004 of the June 48s. These are about 3 handle out of the money calls at the time, listeners. Paper gobbling those up for a quarter, 25 cents. They were 24 at 25, so take that bit with a grain of salt. There might have been something working in there in the book or something like that. Doubt these are a penny wide going out all the time. But still, about getting 10,000 of them on the offer. And let's see how these fared. We say many times on this show, the smart money not always, or I should say the size money not always the smart money. These were opening, of course, and there were earnings on the 30th, so this was an earnings play. And it sounds like earnings and everything else didn't really work out in this guy's fashion. They closed, these are June calls, BP closed at 42.5 roughly on expiration. So I'm looking at the chart here. They never really threatened that 48 level ever in the lifespan of these calls. So go figure, these calls still open on expiration. They were, in fact, the number 1 open interest position in BP as of expiration. So never a good sign when you buy premium and you're leading the OI list going into expiration. So it looks like our friend here came in and wasted about $250,000 on a flyer here. Again, not huge money, but it'll leave a mark. And he liked it. He took a flyer. Took a bit of it. That's why we say earnings, it's a crapshoot. You got to be willing. I'm guessing this guy was willing to lose $250,000 because he did. And so it seems like Mr. Rock Lobster, this guy did not get the premium explosion he was looking for, sir.
That's what is BP? He's like, what is it, $42 or something? I mean, you buy out of the money calls in an oil major, and you're hoping up against hope. I can understand like the mid-levelers, like the Anadarkos and all that, like kind of the mid-level producers and stuff. But buying out of the money calls an oil major that is a rough road. So, and I guess this person, they get the skid mark of the day award from the odd block.
Yep, they're wearing it. They're wearing it on this one. So, yes. See, listeners, not just because someone puts up 10,000 contracts doesn't mean they know more than you. In this case, they, at least on the options side, they obviously got to have other things against this. But in general, just on the options leg, not looking too good. Now, this Monday, this is usually the portion of the show where I toss it to Uncle Mike to do a little bit of strategy. Like I mentioned, he's on the road right now, so let's keep on rolling. Let's see if we can do a little bit of extended edition of the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the show where we answer your questions. And sometimes we ask you guys questions as well, like right now. We asked you guys here to kick off the week, a fun holiday week. You know, everyone's talking new all-time highs in the market. Everything's hitting new all-time highs. If Uncle Mike was here, he'd say never in the history of the markets has there been a better time to sell than right now. Unfortunately, he's not here, so I get to do that for him. He loses. He misses out on his trademark saying. But we thought, you know, it's a good time to pick your brains a little bit. You know, markets hitting fresh all-time highs, volatility eroding at least a little bit. We want to know, what are your go-to index strats right now? We gave you 4 choices. Again, if you don't see your favorite, there's literally a bazillion, I think is a technical term, different number of strategies you guys can use in the index. We gave you 4 common ones. But again, if you guys have other ones, reply, DM, let us know what your thoughts are. The 4 ones we gave you right now, obviously, protected puts and put spreads. Covered calls, number 2. You know, you guys like to harvest a little bit of the old risk premium. Number 3, short puts or put spreads. And number 4, we went for the old collar/bearish risk reversal. So let's go out to Brian, and let's start with you, Brian. If you have a vote yourself, by all means, let us know. But then, B, more importantly, what do you think the audience is up to out there right now, at least in the indices, sir?
Ooh, that's a good question. It's kind of all over the place, right? I mean, if you think of it from just theoretical, you know, if volatility's eroding, maybe it's, you know, if you think it's going to continue to go down, maybe it's a good time to sell options. But at the same time, you know, we look at something like VIX and we think, oh, okay, well, it is, you know, it tends to revert back to the mean. But you can point out many times in the past where it did not revert back to the mean. So it's an interesting time. I'm trying to think of what I've really been hearing, but it's been all over the place really here, because on the strategy desk, you know, we talk to people from all sides of the spectrum. There's definitely people who are going to look at a situation like this and say, yeah, I'm going to sell options and I'm just going to use multi-legs or, you know, multiple different leg strategies so that I can protect myself against being short naked calls or puts and things like that. And then you have the other people on the other side say, I just hate the short side because I don't like the risk there. And, you know, I think that something's going to happen, and I don't think 14 level VIX is incredibly high for volatility. So maybe I'm okay with just buying options. And we hear it all, really. It just depends on what your outlook is. You know, if you think vol is going to increase, well, maybe you're looking at buying options. If you think it's going to decrease, maybe you're looking at selling options. I mean, I don't mean to make it overly simplistic, but we definitely hear from all sides of the spectrum, really.
So what you're telling me is you have a political answer and that you have a non-answer answer?
Yes. I'll tell you, my favorite name for an option strategy is fig leaf.
Oh, well, there you go. Yeah, taking a little bit from Brian there on the options playbook. He does like himself a little bit of fig leaves. Brian will be recording later today, so be sure to stay tuned for that one there. Mr. Rock Lobster, what is if you have a vote, by all means, but also more importantly, what do you think our crew, our audience is up to out there in the indices right now?
You know, I think ultimately people like selling index premium. So, you know, it works. We like to do like spreads, like pair trades and stuff like that doesn't expose you to just the big slamola in the head, you know, in case the market moves. So what are they doing? I'm going to say they probably sell put spreads, something like that. I don't think cover calling and indexes is my thing. I like the kind of the protected put spread strategy myself. So you sell some SPX put spreads, and then you find like interesting ways to hedge it, stuff like that. So I'm a little bit more on that camp in the indexes. So that's what I would say.
You're anti-covered calls in the indices. Wow, you just wiped out like a third of the market. Everyone and their mother likes covered calls in the indices, I thought, sir, except for you. That's why you're out in Maine.
It's a little. That's annoying. Indexes rocket. Like what? Like you're going to sell against your SPX. It's just very. I don't know. It's more of a headache than it's worth. I could be wrong.
To covered calls and indices, the Rock Lobster says, Pshaw to you. All right, let's see what our audience is saying. Again, this has only been up. It's only up right before showtime, so they got the rest of the week to make their voices heard. But in the early voting here, we got protected puts and put spreads taking the number one spot. I kind of thought that, just given the fact where we are at these levels right now. Some people got some protection on the brain. Whether that will stay there for the whole week or not, we shall see. Because Rock Lobsters, right? People like to harvest some premium in our audience. But right now, buying puts and put spreads is number one. Number two, the Pshaw trade, as the Rock Lobster refers to it, a.k.a. the covered calls, 32%. Numero trace here are the short puts and put spreads. So coming up number three here, only 21%. And then 10% going the combo income/protection trade, a.k.a. the collar, or if you want to be specific, the bearish risk reversal with a mere 10%. But that's more love than it had before the shows. Right before the shows, like some people flocking in for the collar. Make your voices heard. Make your votes known. Twitter.com/options. All right, Brian, this is also the time when we like to pick the brains of some of the Fidelity clients out there, because you guys are literally getting calls all day long. When you're not talking to me, you're out there answering calls from the listeners. And it sounds like, I guess I can understand where they're coming from right now, because we are at these all-time highs. It sounds like you're getting a lot of calls about puts and hedging and what to do when, let's say, the hedge doesn't exactly go your way. Is that the case, sir?
Yeah, interestingly enough, everybody was talking about hedging going into the weekend because everybody was afraid that something might happen over the G20. And then, you come in today and all of a sudden nothing really happened to the downside. At least this morning when we first opened up, everything was up, and people asking, hey, if I bought some puts for a hedge and now they're down X percentage, presumably a high percentage, should I just close them out? And, that's really a personal thing. If you're down to, 5 or 10 cents that you can harvest by selling those puts that you bought the other day, well, is it really worth it to take in $5 or $10 when you could just keep them on until expiration and have that potential to have them make you money? Maybe some unforeseen event happens in the future. But, it comes down to everybody. Do you really want the $5 or $10? Well, if you do, if you don't want to get to max loss, then maybe it does mean you should close them out. But I think a lot of people, when they get into that situation, they just look at it and say, hey, it's like if my homeowner's insurance was about to expire in a week, I probably wouldn't try to get a nickel of it back. I'd just leave it on there just in case I get struck by lightning or something like that at this point.
Yeah, we talk a lot here on the show, and I'm sure Rock Lobster, you have some thoughts on this as well. When you're putting on these hedges, don't just do so willy-nilly. Have some sort of rules, some sort of guidelines in place. So if you buy it and it erodes, let's say 30, 40%, maybe you want to do something with that. You want to roll it, you want to take it off, do something else. The same thing works the other way, of course, too. If this hedge works in your favor, if the underlying drops and your puts go up, you also have to have some guidelines in place for when you're going to take it off, because nothing's as bad as it is to have a put erode away and go to nothing. It's even worse to have it first work and be up money for you, and then you forget to take it off, or you don't take it off, and then it erodes down and you lose money on. Then it's a double whammy. Mr. Rock Lobster, what are your general rules of thumb for put usage, sir? Do you counsel maybe 30-odd percent, 40-odd percent, then roll it? And then also on the flip side, the other one's almost maybe more important, what to do with the hedge when it works. Is that another area you guys focus on quite a bit, sir?
Wow, you have many questions in that question.
That's why I get the big bucks, sir.
Many questions. So as far as so I just have a couple of rules of, with puts, I like 1% of the underlying per month as a minimum dollar take when you're selling them. And I don't mean you just have to find the ones that are 1%, but that's the minimum. If you're going to sell puts, I think, if you just keep selling puts, you want to do better than the market. Market's generally 7% a year, so you are doing 12, so you need to do better. As far as, so that means I go as out of the money as I can go. Ultimately you sell puts, you don't want them to get assigned. From a hedge point of view, I think you have to be realistic and say, I've got to take the dollars from the hedge. So it's against what the hedge is. Is it against naked options? In that case, you might want to roll your put and just keep rolling it. Because you're kind of, when you sell a naked option and then you hedge with another put, that's kind of the trade is kind of a pair, like as a, you have a spread, so you have to decide what you want to do. If you put this trade on as a spread, then I do not recommend people, closing that long one, or they can roll the long one, but you don't want to ever roll into like an unlimited or, an unlimited loss situation. So if it is a spread, I will roll once, out once, meaning, okay, so I'm wrong on my one spread or my short put, but I'm stopped out because I have a spread. I will roll it out and down once. And if I'm wrong twice, then I am finished with this position. And I will go look for something else. And it's just have the trade sized appropriately, just because you can't have it go on forever. It's got to have an end. So one is, if you sell those options, that's to have an end. If you're long puts against spreads, or like, let's say an equity or something like that you don't really want to sell, then you can roll the puts. I think that's perfectly acceptable, because the equity is forever and the puts are only temporary, so you're not going to have money in them forever. So you take your money when it comes to you. So ultimately, if you buy a hedge, you need to take the dollars in that hedge. Now, what level? It all depends on what you have against it, and what the rules are. But like if it's a vol, let's say if it's a vol call or an SPY put, every time the put doubles, an easy rule is if the put doubles, roll it. You either take some of them off or you roll it. So you're just like, okay, well, when do I start doing this? Well, when they start making money. That's the easy thing. And when they're not making money, you don't do anything. You hope the other side's making you more money. So that's that's how I see it. So as long as you have a plan for your put and a plan for your hedge and how you want to extricate yourself from it, you've got I think you have a much better shot at managing the position. But you have to do all the thinking ahead of time, because when the market's going nuts, you generally tend not to think very well. Let's just say things can get a little cloudy.
Things certainly can get a little cloudy when the red is on the screen and all of it is hitting the fan. I want to keep going with your questions, but we've got some breaking news I want to get to here right now. I'm always on the folks at OCC. They always put their numbers out after our show, and I'm like, get them out earlier so we can talk about them on the show. Well, they just did. So the numbers are in for June. We're not going to have a show on Thursday, so we kind of got to get to them now. Let's look at it. Remember, we talked a lot about June. June was actually a more volatile month than you typically would see for your typical June, usually a bit of a seasonally quiet period for the marketplace, and yet volume was not commensurate with the level of volatility we saw. We saw that in a bunch of products, even in VIX itself. The ADV came off substantially from about 700,000 down to under 400,000 now. Coming into showtime today, we saw similar levels in the other indices. So maybe not surprising that overall June was another down volume month for OCC. Total contract volume in June, 383.4 million contracts. That's at 6.3% less than June of last year. Let's drill down a little bit farther. We like to look at remember, they clear a bunch of stuff at OCC. Let's look purely at the options. Exchange listed options volume, 377.8 million contracts. That's down 5.9%. It was about 401 million contracts last year. Equity options, let's drill down a little bit farther. 340.8 million contracts, down 6.1% from June of last year. Cleared ETF options, 144.6 million contracts. Actually, a 1.7% increase. That's been one of the few bright spots we've seen of late. Is ETF options has been up. Also indices. Let's see if index options. Also, index options up. Nope. Index options volume was down. Only 3.4%, though. We've seen in other months down 20-odd% or more. So down 3.4%, not a terrible number. $37 million pretty much on the nose for those. Let's see, overall ADV as well. Yeah, OCC year-to-date ADV is 19.5 million. That's down 7% from this time last year. So everyone out there who said in our polls and everyone who's told me at various industry conferences and things that we're going to blow the doors off last year's volume numbers, I hope you're right. But as I said at the beginning of the year, it's kind of a bit of a tough road to hoe, and we're seeing so far here that is the case. Let's see. Futures also another black spot. Remember, pretty much the only future left that they clear at OCC are the VIX futures, and the futures were about 5.5 million contracts, down 27.5% from June of last year. So VIX futures continue to be a black mark over there in the world of OCC. All right, we got some more questions. Yeah, here's a fun one. Let's go to this one. This comes from Wowell. They want to know, I like when you guys talk old school WWE on the show. Well, he probably likes the episodes then when Sebastian's on. He goes on to write, I know the stock was one of the best performers of last year, but is now off about 30% from its high. How are the options shaping up these days? Also, when are the mini metals making a comeback? That's an old school callback. That's from Sebastian's old metal band, the mini metals, the midget metal band that he wanted to manage from way back in the. Do you remember that? I think that was before your days on the show, Mr. Rock Lobster. Do you remember the mini metals?
Mini metals that is thankfully does not ring a bell.
No, yes, that is from the pre-Rock Lobster period of the program. That's how far back this goes. Yeah, I looked at it, and let's pull it up right now. He wants to know what's going on in WWE right now. And he's right. It was one of the top performers of last year. It was a relatively quiet stock. Then they announced some pretty sizable licensing deals, and they kind of been taken on. Looks like they're up pretty good right now as well. They were at 72 on Friday, and they're at and they hit about 74 today before selling off a little bit. So they were up a couple of handles at one point today. Let's pull this. Here's some data from, when is this from? This is from Friday. We saw some actually decent trades on Friday. AUG 90s going up a couple hundred times. Obviously, it's not a huge options name, but it does some paper. People lifting the calls on the AUG 90s for 90 cents 200 times. Actually, this was a spread. It went up. Oh, it was a weird, funky spread. Let's see, 200 of the AUG 80, 85, 90 vertical going up all 1-to-1. He did it here. Looks like 200 times. Looks like he bought the spread. Looks like it. The pricing is kind of wonky, but it's going to be wonky with 3 legs. They can do a lot of fun things with it. But it looks like he probably bought it. So he bought the 80s, sold the 85s, and then bought the 90s again. So we did it all 1-to-1, which is kind of what makes it weird. Usually you see a ratio on the upper portion of these types of spreads. And it looks like that spread went up quite a bit on Friday. So that guy liked that spread. I don't know how many total he did, but probably at least close to 1,000 or around that level for this spread. So 80, 85, 90 was the big trade out there. The top positions coming into today, the July 80s. So maybe our friend is rolling. There's 3,700 of those. He could be rolling from the July, and then number 2 is July 75. So maybe he's got a July 75-80, and maybe he's rolling it to the 80-85 with a 90 kicker. I've seen weirder things. I didn't see a July leg on that, so I didn't see any closing in July. So July was still open coming into today. And we have number 3, the July, Jan, 145 calls, 2,600 of those. And number 4, the Jan 140s, about 2,500 of those. And number 5, the AUG 80s with 2,400 of those bad boys. So, yeah, seems like there's some paper out there. And obviously we know it's off its highs a little bit. So maybe if you're interested in this name, maybe it's an interesting opportunity to come in. Or maybe you think it's beaten down for a reason, in which case you're not intrigued. But either way, just doing some paper. It's doing some funky 3-ways. I don't know. Is this a name you guys ever get calls on the hot seat there on the strategy desk, Mr. Brian? Do you guys, anybody ever calling you in for strategery around WWE, sir?
I have not had I don't think a single call on WWE, to be quite honest with you. I can't even remember if I've seen any options on WWE out in the wild in people's accounts. So no, not something that comes up a whole lot, to be quite honest.
But it would be a fun one, would it not? Someone calls up and says, "Hey, let's talk some WWE," and you get to just have fun for a little bit here. Let's see really quickly what's
you
like.
Definitely bring out some. you could definitely bring out some terms if they were, getting crushed by some suplex or something like that.
Yeah, the
on
stock
them.
took a suplex today, got clotheslined, all sorts of good stuff. Today's paper, not so big. Only the biggest trade's a 62 lot of the AUG 80s. So that seems to be the strike du jour. Mr. Rock Lobster, I know in your legions of crazies there in the pit chat, I know you got at least 10 guys who trade WWE, right?
It wasn't it kind of a hot stock for a while when they were getting some deal.
As he mentions, it was one of the biggest performers of last year. Yeah.
Yeah. So, it might have been what I would call probably like a, impulsive gamma purchase or something like that. Last year at some point, but ever since that all the press and everything, it's kind of. It has not come across the radar yet. Now it's just, sitting around, what is it, $80 or something like that. So not a ton of activity anymore, I'm afraid.
I'm disappointed. I thought with the Sebastian in there all the time that your crazies would be into a little bit of the old WWE. But yeah, it sounds like it's an interesting trader. It does more volume than you might think. So not today, but it has in the past. So maybe worth checking out if you're interested in such names. Meanwhile, it's time for us to keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we tell you what we're watching. We're doing a special one, guys, today, because remember, the July 4th holiday is coming up, so there will be no show on Thursday. So this is our only show of the option block for this week. So we have to go all the way out for the entire week until the next time we all gather here together. So I mentioned there's earnings, but it's not really kicking in again for a couple of weeks. So you're kind of okay there. We've got we got a few numbers, shall we say. We are coming up here into a few numbers this week. So that might be of note. Let's start with you, Brian. What are you watching for the rest of this week, sir?
Yeah, this is a really interesting week if you think about it, right? Half day on Wednesday, or roughly a half day off on Thursday, and then you come back and you get employment situation numbers on Friday, which can have a big move, can make big moves on the market. So pretty interesting week. I think I'm going to be looking out on jobless claims on Wednesday. It's a shortened day, but to get an idea of what might be coming on Friday. So that'll probably be something I'm watching pretty closely. And then you have all the numbers on the construction, international trade. So that'll be worth seeing. Friday morning, fortunately, I'll be on vacation. I might be on the beach low tide digging some clams, like our friend Mr. Rock Lobster. But I will get up at 8:30 to see what the employment situation looks like, and maybe at the end of that day I'll take a look at what the Fed balance sheet comes in and looks like. But Thursday I will most certainly be looking out for fireworks, hot dogs, and hamburgers.
Well, so you have exciting vacations. You check Fed balance sheets when you're on vacation. Who am I to talk? I'm technically on vacation right now, and I'm talking to you guys, right? So who am I to judge about working vacations here? But it is one of those weird weeks. You mentioned it. We kind of have the half day on Wednesday. Obviously, things are closed on Thursday. But all you out there who are the premium sellers like to blast away going to these kinds of events. We do have a non-farms on Friday, so you're coming right out of the day when it's closed right into an event that could potentially have some impact. So, Mr. Rock Lobster, what are you guys counseling your folks here this week with that kind of one event lingering in the background? I know you got some premium harvesters in. I know they're itching probably to be hitting bids as we speak if they haven't done so already. But this is one of those weird weeks, or maybe you want to keep your powder dry a little bit. Would you concur, sir?
I do think this is one that, maybe the hype is not, I think they wanted a little trade relief, but now ultimately you need the rate thing decided and you need the trade deal still decided. So, vol has drifted lower when everybody got, okay, the economy's doing good and things aren't so bad. And I think that's where we are right now. So it wouldn't surprise me if we pulled back a little bit and just all kind of settled, waiting for some real news. So I think that is entirely possible. So a little dry powder. I only got rid of some of my VXX puts. I have a bunch more still sitting around, but I do have some kind of, I have some index flies that are sort of hedging it that are literally right there where the index flies could be worth a lot or nothing. So everything's kind of on a knife edge, and we'll see if we make any money or not. That's kind of what it is. So it was a meh rally. It didn't really hold, so I would have preferred something a little, I would have preferred the enthusiasm hung around, but it just didn't quite do that. But still, overall, I think as good a result as you could have expected out of the G20, to be honest. So there you go.
There you go. And that's going to do it here for the program today. Listeners, but before we go, let's go around the horn and see what everyone has cooking. Our old friend, Mr. Uncle Mike, on assignment. So head on over to stcharleswealth.com and click the tires and light the fires. Click on the fox, as they like to say, and see what happens for you. And Mr. Brian, sir, if folks are intrigued, they like themselves a little bit of the old Fidelity, maybe they want to learn more, maybe they want to see what's going on out there in Fidelity land, where should they go? What should they do, sir?
Of course, I can always go to fidelity.com/options. That's probably the easiest way to get a look at some of the products that we have. And, of course, you can always give us a call, 800-544-6666. And you can always ask to speak to the trading strategy desk and speak to myself or one of my other colleagues that's on the show every now and then. And we'll be more than happy to help with any questions you have.
And Mr. Rock Lobster, last but not least, sir, if folks are intrigued, maybe on this holiday week, they want to talk about some premium harvesting or maybe when not to, where should they go? What should they do, sir?
Go to our store. We'll do anything 50% off of the store for the 4th of July. So if you see something you like, let me know, and we'll come up with some kind of a deal for you if you're interested. So Andrew at optionpit.com. Other than that, we really won't be around Friday, even though I think it's a full market day, and I believe Wednesday is a half day. So, but we will not be around Friday. So that's what we got. And of course, we'll still be watching around. So I will be in my office, but not doing a lot of option pit activity on Friday, I would say.
Yeah, we have no show again on Thursday, so this is the only show for Option Block for the week. Still undecided about vol views, listeners. We'll let you know closer as that date approaches whether or not we'll have a vol views. I don't think so, but we'll have to check and make sure for certain on our schedule. But if you want more content, we got you covered in a little bit. Brian has mentioned our other friend Brian coming on in a little bit to talk his options playbook. So stay tuned for that. Unfortunately, won't be live. So if you're listening live, you won't be able to hear that. But then I'll be back again a little bit later today to talk all the volatility and trading and fun in the world of crypto with our crypto rundown. That will be live. So stay tuned for that coming back at you in about an hour or so. Otherwise, we'll see you back here next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.